Present.
Okay, all council members are present except for Councillor Cable, who has sent his regrets. And I will ask if there's a disclosure of pecuniary interest. And seeing none, if one should arise during the meeting, you may declare it then. So we have one delegation for this audit committee meeting. We have Barry Heaney and Kevin Tremble from BDO Canada LLP. They are going to give us a review of the Town of Hanover audited financial statements for the year ended December 31st, 2022. So Barry and Kevin, the floor is yours.
Okay. Thanks a lot, everyone.
If you make sure the red light is on like this.
Who's a person? It looks like a person speaking in the middle.
Yeah. Blinking green.
Oh, it's something else.
Oh.
I've got a red light. Yes, turn it off.
Oh, there.
Okay. All right, new technology, but thanks a lot, everybody. Good to be here to present the statements, and it's I think another positive year for the town. There is always some variances from year to year, so I'll start with the statements, and then we also have a letter to the to council as well to report on findings from the audit. So everybody has the financial statements. I guess they're up on screen there. We will jump to page 4, which is the auditor's report. So it starts at the top there with the opinion. So this is a clean audit opinion. So it's right at the front of our report. This is our report that's addressed to your financial statements. So in our opinion, these statements present fairly in all material respects the financial position of the municipality as at December 31st, 2022. The basis of opinion is our audits conducted in accordance with Canadian generally accepted auditing standards. And the responsibility of management, which is council right now, and those charged with governments, is council. You are responsible for the preparation of the financial statements and the numbers that are included in these financial statements. The next page goes over the auditor's responsibility. And we just have, our responsibility is to obtain reasonable assurance that the consolidated financial statements are free from material error. We do disclose materiality in the letter that we'll go over. That's one of the things we disclose to you. One thing I like to do before we start is on page 11, it goes through our basis of accounting, and you'll note that these are consolidated financial statements. And that's because, well, first of all, the basis of accounting is public sector accounting, which is consistent with all municipalities. But in the base of consolidation, it shows what entities are all included, so that everybody is aware that these statements do include the Police Services Board, the Cemetery Board, the library, the DIA, and the launch pad. There's also proportionate consolidation because you guys control all these boards. That's why they're all included in the consolidated statements. And there's also proportionate consolidation for your share of some partnerships, including SMART, the landfill, and the Saugeen Municipal Airport. So your percentage of that revenues, expenses, assets, liabilities are consolidated into these statements. So that's what's included in these. And then we will jump to back to page 7, which again, it says consolidated, but statement of financial position. It's similar to a balance sheet. It's basically a snapshot of your assets and liabilities at December 31st. And the highlighted column obviously is the current year, 2022. This is just a high level review. So we're just getting into kind of major variances. So cash is at 11 million. It's down 962,000, but there's another, you'll see the next line, another 1.5 or 1.6 million invested in investments. So overall, when you combine the two, it's actually up. Taxes receivables up 163,000, and it's not a big number. It's your tax receivable are still in good standing. There was just less collections during COVID, which has now started. So I think that's back in line now. The other, financial assets, there's really not much change year over year. So in total, there's 21.48 million. Last year was $20.58 million. Really, that's not a big swing in your financial assets for a municipality this size. Liabilities, again, there's not huge changes here. Payables are up 177,000. It's more just timing. I mean, that's less than 10%. Deferred revenue is a lot to do with some of the funding, the gas tax funding just being received and not yet spent. But it's up 140,000, which again on a municipality this size isn't big. And $157,000 repayments of long-term debts. Your long-term debt's down that 157,000. So overall, your liabilities are up 250,000 related to the payables and the deferred revenue increases. That nets with an increase in your financial assets. The increase in financial assets was 895,000. So the increase in net financial assets is $645,000. Then where there's a little bit more variance is in the tangible capital assets. So, and there's a little bit, land held for sale. It's up $500,000. There was a purchase of some land, and then there was 31,000 of land sold in the year, a lot or whatever sold. So the net is a $464,000 increase in land held for sale. And then obviously the big one is your tangible capital assets. So that's all your infrastructure, vehicles, equipment, buildings, all that stuff. So high level, there's $5.4 million of additions, $147,000 of disposals, and 2.8, almost $2.9 million of amortization or depreciation. So that's an accounting entry to basically match or expense those capital assets over their useful life. So it just brings down the value of your infrastructure over its estimated life. So overall, when you look at your non-financial assets, there's a $2.9 million increase. That's your investment in all of your infrastructure. And that adds to your change in net financial assets of 645,000 to get your accumulated surplus increase from 101 million to 105 million. It's a $3.6 million increase, and that's your surplus that's shown on your next statement. But again, that includes money you're investing back into capital assets. So that's kind of the snapshot of your I call it balance sheet or financial position. The next page shows your statement of operations. So this is what happened throughout the year 2022. Taxation revenues come in within 23,000 of budget, up 378,000 from last year, or 5%. Government transfers are up 965,000 from last year and 1.4 million above budget. And a good chunk of that, probably half of that increase is extra funding from OLG, which I don't think you could budget coming out of COVID. It's really hard, right? So that's a big reason for that change. Water and wastewater is up 469,000 from last year and 331,000 over budget. User fees and service charges are up 418,000 from last year, 306 from budget. So I think there's a general theme of some things coming out of COVID, just having more activity than normal, or than last year. Investment income is 108,000 higher and above budget by 300,000, and that's mostly just the interest rates, really. Donations. So last year there was a bunch of assets that were assumed by the town that were not set up in the past. So there was an additional 500,000 this year of that. So that's why it's over budget. But last year there was 12.3 million of assets assumed in the donation. And that's why there's a huge decrease this year. So last year showed, you'll see the annual surplus if you jump ahead, a very large surplus, which is not normal for the town. But it was basically a bunch of tangible capital assets and infrastructure that was assumed by the town that hadn't been on their books in the past. So this year it's more of a normal year, whereas there is still 500,000 of that, but it's down obviously from last year, the donation of 13 million. Now it's more in line with where, you know, the budget at 748,000. And other incomes is pretty close. So overall, there's almost a $10 million drop in revenues, but again, 12.3 of that's from these assets assumed. It's more of a one-time pickup. So this year at 23.2 million versus 20.4 last year. So you're above budget by about 2.8 million, mostly with government transfers, OLG, and then a little bit of extra activity in some of the other lines. So again, with expenses, part of it'll be an increase in COVID. There's a general theme of when you assumed all those assets that, you know, the 12.3 million of extra assets assumed, we depreciate them over time. So yeah, there was extra donation revenue last year, but now over the next useful life of these assets, they're going to be depreciated. So there's going to be more depreciation expense, and the depreciation goes with each of these different lines. There's all assets being depreciated in all these lines. So, but there's also other things. So general government is up 895,000 from last year and 529,000 from budget. And part of that is some software costs and some fire from the downtown fire. There was extra costs there.
So Barry, excuse me for interrupting you. Would you prefer to have questions?
Oh, sure. No, sorry. I meant to say, yeah, if you have questions, please let me know.
Deputy Mayor Dickert.
Thank you, Your Worship. The question has just the 20 or the $12 million. Is that the two subdivisions we assumed in 2021? So, yeah, 5 subdivisions. Okay. Okay. I just want to make sure. Thank you.
Yeah. I know, and that sticks out like a sore thumb, that number. So I'm glad you got some clarification too on that. Yeah, so then protection services, it's close to budget. It's up about 500,000 from last year. So there was some extra overtime from the fire in there. There's fuel, there's depreciation and wage increases to keep up with inflation as well. So that I think was in line with budget though. Transportation, a lot of that is dictated by SMART, but it's down 292,000. And there's just some budgeting with that and SMART. There's some of the funding not budgeted there. Transit is pretty close to both prior year and budget. Environmental services, that's pretty close as well. It is down 531. I think landfill is down a little bit. There is an increase. There is some amortization of landfill. But it is down from last year as well. And what was the other one? Yeah, the rest are all pretty similar. Rec and culture had a large increase, but close to budget. And I think that was one where you're back to more of a normal year from COVID and have more activity, more wages, more services. So there's more costs. And planning and development's down 300,000 from last year. And there's some stuff with the Queen's property there as well that went on, and some extra land sold last year that there wasn't this year. So overall, the 3.6 million surplus is more of I think if you go back 2 or 3 years, it's closer to what that was. And if you take the $12 million of assets assumed last year, it's more in line. So I better keep track of time here. So again, yeah, it is very high level. The other schedule there, the next page, the change in net assets, financial assets. It starts with your surplus. and then has the change in the capital assets because they're non-financial assets. So it shows, okay, it adds back amortization and deducts the purchases. So this net financial asset, it'll tie into your statement of financial positions of 15.3 million. But this just shows, okay, it starts with your net income and does the changes in other assets that are non-financial. Statement of cash flows is more what you'd be used to seeing in more of a business type statement, but it starts with your surplus as well. It has non-cash changes in non-cash items, which is you'll see the depreciation of $3 million of assets. That's added back because it's a non-cash item. So there's generally about $6 million generated, and then some changes in working capital. So changes in receivable and payable balances, deferred revenues, that type of thing. So when you net that all out, there's 5.6 million generated in cash flow from the town's operations in the year, and that's almost within $100,000 of last year. So very consistent cash flow wise. Then you spent a net of $4.8 million on capital assets, and you invested the $1.5 million in investments, and paid down 140. You guys don't have a lot of debt, so your financing activity is only $148,000 of payments on debt from the Civic Center. So overall, there's the $962,000 drop in cash, but as mentioned, 1.5 of that was put into investments. So that's at the end of the year, you got $11 million of cash. The notes, I'm going to skip over a lot. We kind of went over the base of accounting and consolidation. A lot of the accounting policies haven't changed. If we go to page
Barry, excuse me, Chris.
Just wanted to reiterate the long-term debt is not for the Civic Center. That was for the P&H Center. That's that score. Sorry.
Sorry. Yep.
Continue.
So on pages 15 and 16, there is still that West Area Power investment. So you've got the loan receivable. Nothing's changed there. So there's a loan receivable, and on the next page, there's the value of the shares that's just left at cost. I think the main ones to go over the landfill. That's an engineering report, and your share is in there, the half. So there is the estimated cost of 2.5 million, but there's still a useful life of is it 25 years? 30 years. So it's being amortized as you use the landfill. So as it gets used up, we amortize the cost. The liability goes up, and so liability was 733,000 there at the end of the year. And pension, we always disclose that you're part of OMERS, and because it's a defined contribution plan, it's what you put in. So we disclose the expense of $480,000 was your expense in the year for money you put in for your employees into OMERS. It discloses there is a deficit in that plan. That's the whole plan as that everybody's part of. Pages 20 and 21 break out the capital assets, so tangible capital assets, and it has it broke out by land and land improvements, buildings, equipment, vehicles, and infrastructure. So it starts with cost, and then you see there's additions. If you go all the way across, there's 5.4 million in total additions in the year, 1.7 in buildings, and most of that is the theater here. And then the other main, like there's some equipment and vehicles, but the main other addition is the infrastructure, mostly on 11th Street. A good chunk of that 3 million was on 11th. And so page 22, note 11 is the accumulated surplus. These all have a reference to another line, but in the general deficit in the year was the 47,000. So down below, the only entity that had deficit was the 40 was airport. And then the rest was either reserves and reserve funds, which there's a note on, we'll touch on in a minute. There's 18.2 million. Amounts to be recovered are your liabilities and loans and whatnot of 2.5 million. You have an amount invested in land, which we saw on the balance sheet, an amount invested in tangible capital assets, which we just went over. That's the 87.6 million. So that's what makes up your accumulated surplus of 105.3 million. Most of it is either reserves set aside or investments in tangible assets, capital assets. So the next page shows your reserves and reserve funds. So they are broke out by reserves set aside for a specific purpose. And reserve funds set aside for specific purpose. So overall, you can see the breakdown there. If there's certain projects and whatnot where reserves are set aside. Overall, there's actually a $404,000 decrease in reserves set aside for a specific purpose. And that was money spent on the theater. Mostly. There's changes in all of them. And then reserve funds, you'll see some extra reserve funds. And there was also a decrease in the investing in Hanover in the year, but an increase in others. So for water and wastewater, there was significant increases there. So overall, there's $960,000 in reserve funds. So when you combine the two, there's a $556,000 increase in reserve and reserve funds over the year.
To reiterate on the investing Hanover, that's the money we use for the North industrial lands to purchase. So that's why our lands have gone up in investment. So that you're aware where the money went to. It's not like we just took it out and spent it on other stuff.
And then the next page shows the amounts to be recovered, but I mean, we've gone over all that. It's all your liabilities basically of 2.5 million. That just makes part of your surplus, your accumulated surplus. That's why it's in a separate note. Government transfers in the year, you'll see, I guess, more of a breakdown as well on that. So prior year, it was, you're kind of budgeting similar to prior year, but there's a little extra. And you can see the OLG is the biggest jump. And I think we'll go to actually note 17 shows the government partnerships. So this just breaks down the proportionate consolidated entities that are part of the municipality. So that's a little more breakdown on the airport, SMART, and the landfill. So these are more their balance sheet and their revenues, just kind of a summary of their operations. So you see, like it's hard to know, just to give you the readers a little more information. So I think that is the highlights of the statements. I will obviously be going over this a lot in the council meeting, like the open to public there. It'll be obviously just a high level review of the highlights and subtotals versus getting into more. I got into a few lines here with you guys. So is there any other questions at all?
Are there comments or questions, council? I don't see any.
Okay.
Okay. All right, so without anything further, we can end the audit.
We do have a letter.
Oh, sorry.
The audit letter, sorry. Yeah.
We don't need to go into closed for that if it's about a staff member in a professional capacity. So then, no, we don't need to go into closed.
Okay, Barry,
Kevin.
or sorry, Kevin.
Okay, thank you. Yes, so included in the package is a letter that we were required to present to those who are charged with governance or council. It's a fairly lengthy letter. I'm only going to touch on a few of the highlights. Everybody's had a chance to read it over the weekend and help. And can ask any questions as we go at the end of the letter. So I'm going to flip right into it on page 4. It's audit at a glance. So I do want to highlight that when we plan the audit, we set materiality based on preliminary numbers. We set materiality at 575,000. It's always based as a percentage of total revenues. So when we got the final year-end numbers in, we ended up increasing materiality to 600,000. Just want to make everybody aware of that. It didn't significantly change our audit, but we did increase it. Further down that page, you can see that we're not aware of any fraud affecting the municipality. As part of our audit, we always have to keep our eye out for any sort of fraud or anything that looks unusual. As council and those charged with governance, if you guys are ever questioning things or want us to look into something further, feel free to reach out, or if you have any fraud issues, don't wait till this meeting to let us know, but anytime during the year, you can give us a call. We have our contact information here. On the next page is the status of the audit. So we are 98% done the audit. We got a couple little housekeeping items to finish up here, probably tomorrow morning or something. We'll get that all done, and then we'll issue a final signed report that you can post on your website. On the next page is audit findings. So as part of our audit, we always do a risk-based approach, and then some of our risks are obviously more significant than others. So we highlight some of the more significant risks to a municipality. So it does indicate what the 5 significant risks we identified during our audit. We just do a little bit of extra work on that, and for all 5 of those risks, we didn't notice any issues during the audit. It's just to highlight that we do look into some of the areas that are either complex accounting standards or a little bit more judgment that could be used to change the numbers there. Next page is internal control matters. Nothing to note here, but I just want to make you aware that if we found something, there was a glaring hole in your internal controls, we bring it to your attention so that you could address it or determine whether you needed to address it, but there's nothing to note here. On the next page is the unadjusted differences. So these are when we say materiality 600,000, it doesn't mean we ignore everything underneath 600,000. We tabulate them, and in some cases we'll adjust them through discussions with Chris and her team, or we'll leave them on what we call an error summary, and they'll get adjusted in a future year. So these are the items that we've discussed with management. They're going to stay on the error summary this year, and they'll be fixed next year. And you can see they all total less than our materiality of 600,000. If we go to page 11, it shows how we audit, how we do our audit. The big change this year is a new auditing standard for all accounting firms called CAS 315. So that the accounting industries kind of realize that there's a lot more IT stuff and a lot more stuff in computer boxes and stuff. So we had to get our IS audit specialists involved in all audits now. So there was a lot more questions for Chris and her team at the planning stage to better understand how all the transactions work within your IT environment. So that's kind of what that slide highlights there, the next 2 slides actually. The next 4 or 5 slides are just more for information. If we go to page 16, recommended resources, I do want to highlight there's a significant accounting standard coming out for next year, which is coming up on us here shortly already. Asset retirement obligation. So it's going to completely change how asbestos removal and landfill liabilities are calculated. So we're going to work with Chris in the fall to get ahead of that and make sure the plan's in place for that. There might be some experts involved in that, and it's just a different process. I don't think the numbers will change significantly, but how we get to them will definitely. In the appendix, Appendix A is the Independence Auditors Report. Barry already touched on that, so I'm going to skip over that. Appendix B is the Independence Update. A very important part about being the external auditors that we're independent of who we're auditing. It's an unbiased opinion. So we always have to keep that in mind when we are auditing. So in this case, we do provide some assistance preparing the consolidated financial statements. It could be seen as a self-review threat. We're helping prepare it and then we're auditing it. So some safeguards we have in place there is that the council approves the financial statements. Any adjusting journal entries that we propose during the audit, management would prepare all the source documentation and ultimately approve the journal entries. And then we always have more than one level of review. So whoever prepares the file, it gets reviewed by our detailed reviewer, then ultimately by Barry as the engagement partner. So we feel that with those safeguards in place, we are independent of the town of Hanover to issue our audit opinion. And then the third appendix is just a representation letter. So as part of our audit, a lot of our audit evidence comes through discussions with the mayor, through discussions with Chris, some verbal stuff. So this is the letter that basically says everything that we've asked for. They've been honest and forthcoming in what they've provided us and not withholding anything that may impact the financial statements. I'd like to thank Chris and her staff during the audit. They're always good to work with and make sure we get everything we ask for in a timely manner. It was a good audit again this year. So that's all I had. Any questions?
Thanks, Kevin. Are there any questions, further questions? Seeing none? That's it then. So I will thank you very much, and you'll present the highlights when we start at 4 o'clock. So I need an adjournment, a mover and seconder to adjourn the audit committee meeting. Councillor Hawking and Councillor Sackel, all in favor? That is carried. Thank you. So we will